Hey, what's up, my beautiful people? It's your boy Devo, so motivational, back with another day trading spy recap. And man, this is my second time recording this video. Thought I was recording, didn't even have my screen shared. So we're gonna go back over it. Remember, I love every single one of y'all who are with me on this journey. All the likes, comments, subscribes. It really means the world to me, right? Like every single one of y'all, it definitely doesn't go unnoticed. Thank you for all the likes, the comments, the subscribes, all the recommendations on content that I need to come out with. Everything really means a lot to me. Okay, and so without further ado, let's get straight into it. Okay, so we don't have much news from today coming out. Right, the only news we have is we go into this real quick. We had this news that says President Donald Trump's first 100 days in office are the worst for the stock market for the start of a president's 4-year term since the 1970s. The S&P 500 7.9% drop from when Trump was sworn into office on January 20th through the April 25th close is the second worst first 100-day performance going back to the beginning of President Richard Nixon's second term, right? So that's not really good, right? So the worst 100-day performance since the 1970s, which is not very good, right? That's just some news that came out. That's pretty much really all the news that came out today on President Trump. That won't really move the market. That's kind of just giving an overall on his summary of his first 100 days of being in president, right? Like it or not, that's that's what's happened in the stock market, right? We know President Trump likes to make history, and history he did make, right? For good or for bad, right? Okay, so I'm not gonna make this video too long. My last video, I thought I was recording for you guys about 35 minutes. I want to make this one actually shorter. Not because I'm just trying to speed through, because I don't want to make the videos actually too long for you guys, because I want you guys to be able to actually listen to them and actually follow with me without getting, being in the watching my video for a whole hour, right? I don't want to get you guys bored, right? And so, tomorrow, let's just go into the earnings that we have tomorrow. Tomorrow we will have some earnings, but this will be when the market closes. Okay, so it's not really something we have to worry about going into the market, but these are the earnings that we will have once the market closes. We'll have Visa, Starbucks, Snapchat, First Solar, excuse me, and we'll have some other ones, but I think these are pretty much the most important ones: First Solar, Snapchat, Starbucks, and Visa. And then this are the data that we have coming out is very important, right? The data we have coming out is some very important data. Okay, so tomorrow we'll have goods trades balance, so we'll have trade balances, right, coming out, which sounds pretty important. Let's go to it. U.S. trade deficit in goods narrowed to 147 billion in favor, exceeding markets expectations, right? So if we can see, that is basically what President Trump is talking about. He's trying to get our trade balances um like better, right? He's trying to reduce our trade deficit, right? And so we can see if that comes out, if that comes out better than expected. The forecast is negative 140 billion. If that comes out better than expected, that could be good for the market. As well as we have retail inventory, retail inventories, wholesale inventories, which is pretty important. But then down here we come to the even more important things, which house price index, month over month, year after year, which is very important. House prices. And then right here we'll have the JOLTS job openings. We have consumer confidence, which is the consumer's confidence in the economy. And then we'll have job quits, right? But this right here, the JOLTS job openings, is very important. Why? Because job openings is showing strength in the economy, right? Because if we have lower than expected job openings, that is showing that the economy is tightening, right? That jobs aren't hiring as much because they don't want to pay, right? They don't want to pay people, right? They're not hiring because they can't. Do you see what I'm saying? And they can't hire because they're probably not making as much money, right? So they can't afford to have more salaries and more wages, right? So if we have lower job openings, that means lower that means not as much money in the consumer's pocket, our pocket, right? And then, as we know, less money in our pockets, less money goes into the markets because we don't have money to spend, okay? So, these Joe's job openings, this consumer confidence, this house price index, really all of this is very important data, right? The trade balances, yeah, the good trade balances, retail inventory, wholesale inventories, house price index, job openings, consumer confidence, and a job quiz. That is very important data we have coming out. But good thing is we have it all coming out 30 minutes before the stock market opens, right? So it says 9 a.m. So if you're on Eastern time, your market opens up at 9:30. But if you're on Western time, the market opens at 8:30, right? And so it opens at 9 and 8, depending on your time zone. And so all of this data would be pretty much out before the market opens, right? So that is good. So let me just take you into the charts to show you the trade I took, the trade I missed. Well, this is the trade I missed down here, um, and why I didn't take this trade down here, why I didn't take this move down. But then I'll show you the move that I missed, and then I'll show you that the trade I took. Okay. So let me come into my 5 minute to get you guys a better showing. Okay. Because as we know, the 5 minute is where I'm mainly on. I just scale down into my 1 minute to get my exact entry, as I'll show you guys. Okay. So to start the day, this was pretty much perfect, right? Because what do I tell you guys every time? What I want to see is react. I want to see us climb and get a reaction off of that resistance, knocking us down, giving us a change of character, which we did. Or I want to see us hit this resistance and then knock through it, turning the resistance to a support, right? But what did we do? We hit this resistance, gave a change of character before giving us a pullback into this fair value gap. Now you say, okay, Devin, you know them things. Why didn't you hop in at this fair value gap? Well, there's a very good reason. This was very tricky. Why? Because I have no wicks on these candles, right? No wicks, right? So it's showing that the sellers aren't. Sorry, guys. Sorry. So it's showing that we have no sellers stepping in, right? Because these buyers are buying up, but it's not showing no wicks, no reaction off these fair value gaps, but these big red candles. You know what I'm saying? But usually you'll see wicks off of your fair value gaps because that is showing where the opposite power is stepping in. For example, when we reacted off of this fair value gap right here, you see these wicks, right? These wicks because price got sold down, but then got bought back up, right? So that's why you're getting the wicks, right? These wicks because this is where buyers are at. So that's what I was looking for. Wicks right here because that's what you always look for, right? You look for wicks because it's showing, okay, this is where the seller power stepped in, right? For another example, at this fair value gap right here, what did we get? We got wicks, right? Because this is where the buyer volume was at. The buyer power, right? Right here, look at this. Fair value gap, right? This is the trade that we missed on that Friday that we just didn't take, right? It used the support, but it also gave a wick at this support and also this fair value gap, right? Because it's showing this where buyers stepped in. Excuse me, my good people. At this fair value gap right here, these wicks. So we know wicks happen at the fair value gaps, at the order blocks, at these key areas of supply and demand, or even support and resistance, because that is showing where the opposite power is stepping in at, right? So that is why I didn't get this move, right? That is why I didn't get this move down, which we're not mad at, right? Because that was tricky, right? That's not showing us any wicks or any type of power, right? It's not showing us no reason to trust this move. It's actually showing us that price wants to move higher based off of price action, right? Based off of this candle, you would think you'd get another candle to keep moving up. Before we broke down, and this is where I thought whenever we had it buy back up, it didn't break structure yet. When we started buying back up, I was like, okay, maybe we're gonna go up a little higher, get some type of wick, or maybe we're gonna actually come through and break this support, break this resistance, right? But no, what it do? It dropped right back down. It broke structure, creating this downtrend. So I'm not mad at not getting at that because, like I said, that was a little tricky, right? But the one I'm mad at is this one right here, this fair value gap right here, because that was the move I was waiting for the whole time. Why was I waiting for that move the whole time? Because we broke through. Oh, let me delete this. Because we broke through this area of support, made it resistance with this wick, also touching the fair value gap and broke structure. Wrong one. Right, and I would have had it at the top of my fair value gap. It pulled up into equilibrium. Thing right here. That's a 2.5 to 1 risk to reward ratio. Right? So that is perfect. That's what I was looking for. But let me scale into my 1 minute and show you why I didn't take the trade. So my 5 minute, we pulled up into equilibrium of the fair value gap. But this is where when I go into my 5 minute, whenever I'm on my 5 minute, when I see it pull into my fair value gap, you want to scale into your 1 minute to see your even smaller fair value gap and get your exact entry, right? So I pulled into my 1 minute fair value gap when I seen price retracing or pulling back into my fair value gap. I pulled into my 1 minute and I see, okay, I have a fair value gap in my 1 minute. So I, what is it called? Downsize my box, right, into my fair value gap, waiting for equilibrium. So 5 minute, it hit equilibrium of my fair value gap. But my 1 minute, it didn't, and that's where it was tricking me up, right? Because I wanted it to pull up into equilibrium, right? Because usually you'll see price pull deeper into your fair value gaps than what this one did, right? So again, in my 5 minute, it hit equilibrium, but in my 1 minute, I was waiting for equal confirmation, right? But no, so that's where right here, this was frustrating. This move was frustrating because I was waiting. I was literally just staring at this whole thing happening and just waiting on it, right? And at these wicks, this was exactly what I was waiting on. When he dropped, I was like, okay, we have a fair value gap. I want to see his pull up, and I want to see his react off of this fair value gap before breaking down. I had all this already ready, right? But what did we do? We broke down without me because I was waiting for equilibrium of my fair value gap, and we only literally touched the bottom of this fair value gap, literally like the bottom of this candle. Look at that. This move is literally. You see where it touched? Excuse my goofy. It barely tapped this fair value gap. Barely touched it. Right? So it didn't give me any type of equilibrium into my 1 minute fair value gap. So that's where it was tricking me up, and that's where I was waiting on the exact entry. Because I explained it on Instagram that I missed the trade waiting for my exact entry. And I'll actually go over the trade that I did take, which I did make a little bit of profit on, but it wasn't the full move that I was looking for. And ultimately, you want to get in at the big moves. You don't want to get in for like a little tiny little itch, right? Like I was expecting a bigger return, right? So I'm gonna show you that. I just want to go over the moves that I missed, right? And please, if you don't follow me on Instagram, that's where I update you guys as well. But on there, I actually, like, before I even get into a trade, I'm showing like, will this fair value gap hold up, or showing like little areas where I'm thinking about getting into a trade or what I'm waiting on. So if you do not follow me on Instagram and you want like more access to me before I even drop a video or anything, my Instagram is Devo So Motivational, the same as my YouTube. Okay, that's the same with my YouTube, with my Twitter. My TikTok is all Devo So Motivational, okay? So that's just if you want to have more access with me, and if you want to, yeah, exactly what I said, have more access with me. I respond to all DMs. And again, I thank all you guys for the content recommendations. I thank all you guys for the comments, for the likes, and for the subs. We hit 50 subscribers. Let's go. I think it was last Thursday I said that we were basically getting a subscriber a day, and I wanted to see us hit 50, and that's exactly what we did. We hit 50 subscribers, so now we're itching up. We're trying to get to 60, and then we're trying to get 75, and just so on. Okay, we're just gonna try to keep building. And remember, I love every single one of you guys. Okay, excuse me, my good people. So, yes, I was waiting on equilibrium of my 1 minute fair value gap. We did hit equilibrium on my 5 minute, but I wanted it on my 1 minute as well for my exact entry. And that's where I was probably being too picky on the entry, and that is where I missed the trade. You see what I'm saying? Being a little too picky, but at the same time, that's not too bad. Why? Because a lot of times you will see price pull a little farther into your fair value gap, right? Because it literally touched like the bottom of this candle. More times than not, you will see price retrace a little further into it, a little deeper. You will see price come like up to that equilibrium, or probably a little under it, or probably a little over it, right? But you will see a little deeper pullback than what it did. And so that's what I was waiting on. I was waiting for a little deeper of a pullback, equilibrium my 1 minute. But we broke down and we broke structure without me and before. And then after that move, after that break of structure, I was pretty much done, because that was my move, right? That was the 10:30 to 10:45 move, broke structure, and then after it broke structure and everything, you're pretty much at the 11:15 to 12 o'clock, and even at 12 o'clock, you gave a little bit of a drop down again. You broke structure again, gave a little bit more of a drop, but at that point, excuse my good people, you're already so far down the move. It's already late in the day, and so those aren't really my times I want to trade, right? I don't really want to trade 12 o'clock. I'm not really trying to chase the move all the way down here, because as we see, price gets bought up, right? Price got bought up from that 12:30 all the way up, because you're already so far down the move, and you know what I'm saying, that like the move's already pretty much over, right? You're already so far down, right? So this was my move, and like I said, I mean, it was a little frustrating because I was waiting on a little deeper of a pullback, but you can't be too mad at it, right? Because most of the time, or a lot of the time, more times than not, you'll get a little deeper pullback than that. This pullback it literally touched the bottom of this candle, and it just gave up and just, yeah. So that was the, excuse me, so that was the move we missed. A little frustrating, but hey, it's all right. Tomorrow we're gonna show up, and that's why the market's open tomorrow, right? So let me show you the trade I did get in at, and then I should be able to wrap it up for you guys, right? It shouldn't be too long of a video. For you guys. So the trade I did get in at, what I was looking at going into the day. Let me come back with my 5 minute. Going into the day, what was I looking at? Like I said, I seen we started off at this 551 area, and then we broke up, and I was like, okay, are we gonna break up and break through this resistance and make it support, pull back into a fair value gap, make that resistance support, and I'm in, right? Or are we gonna hit this area of resistance and give a change of character, fair value gap, and continue the downtrend? And I tell you guys this literally every single day. I'm like, what I'm looking for, and it literally does these things, and I still be missing them, right? So that's why it's frustrating. But this one was a tricky one, so right. So I don't really feel like I missed this part, but this one right here I did miss. This move down here I did miss, but this one was tricky, right? Again, I didn't get my wicks on top of my candles. It wasn't showing no power, no selling power, because it's not giving the wicks. There's not even real volume right there, right? But excuse me. But price action doesn't lie, right? Price dropped, right? But where did I get in at? So when we see price start falling, I was like, okay, well, I see my fair value gap. I see my fair value gap because why? We're in this uptrend, right? Because we have a low, a high, higher low, higher high, and then this was supposed to be a higher low. And so that is where I got in at. Once we started pulling down into here, we started wicking. I scaled down to my 1 minute time frame. I scaled down into my 1 minute time frame whenever I seen it start wicking. And then that's when You make your box tighter to get your tighter entry, to get your more of an exact entry. Screw up if you. And what did it do? Exactly what I was waiting on for that last one. Equilibrium, at least. Oh my goodness. At least an equilibrium of my fair value gap. Get these wicks. We started breaking up, and I got in at this candle right here. We started breaking up some more before breaking down, and we wicked, and this is where I tapped out at. Why did I tap out? And I could have rolled it up for about a. I mean, I got out right here. I could have rolled it up for about almost a $2 move, a little bit more, a little more profits, but it was showing that there was no volume, right? There's not real volume, as you can see. So remember, what do we want? We want price action, we want momentum, and we want volume, right? We want price to move, be moving fast. We want to see volume candles, and we want to see price action. We want to see price action moving in our direction. So we didn't have volume. We had price action moving in our direction, but we didn't have no volume, and the momentum was slow. So that's where I got in right here. When we started breaking up, it immediately gave this pullback into this fair value gap. So remember, we got a reaction off of this fair value gap, but when you're reacting off of fair value gap, you'll get another fair value gap, and you'll keep cleaning up these areas of liquidity, okay? And so, but if this move was actually strong, if this fair value gap was actually strong, you would have seen bigger momentum candles. You would have seen price jump up a lot higher before giving this fair value gap, right? So, because remember, price jumped up from 549 to 551, and then immediately gave a pullback, a deep pullback, right? And it wasn't this move wasn't very strong, right? So that's why I tapped out up about $20, right? And ultimately, I was right because it did. What did it do? It used this fair value gap to react off of this fair value gap, right? In the 5 minute, we know. In the 5 minute, we know this is a fair value gap right here, right? And so that's where I was right on that move, knowing that okay, I'm not getting a lot of power off of that because I wasn't getting a lot of momentum. I wasn't getting no volume, and it turned out to be right, right? I could have been up a little bit more profit, but you don't want to be in the move that's not the actual move, right? You want to be in the move that creates the big move. You see what I'm saying? You want to be in the move that drops for $5, right? You don't want to be in the move that goes up and struggles for 20 to 30 minutes just to get up $2, right? You don't want to be in that move. But ultimately, what was my long position? Risk to reward. So I was looking for this. I got in right here at this fair value gap. So I was looking for stop loss at the bottom of this fair value gap. Entry at about equilibrium of this fair value gap. Well, my entry was right here. So I'll show you my entry was right there. Stop loss down here. But my target was these highs, right? Because this would have been breaking structure. So it would have been about a 3-to-1 risk to reward, right? So that's very good. And again, I got to correct myself on something I told you guys yesterday. So I told you guys yesterday, if you had a 2-to-1 risk to reward ratio, you only need to be right 50% of the time to be break even. Well, that is incorrect, right? You need a 2-to-1 risk to reward ratio. Well, if you have a 2-to-1 risk to reward ratio, you only have to be right 33% of the time just to be break even. And 33% of the time isn't even a very high win percentage. It's not a high risk percentage at all, win percentage at all, right? So that's why you aim for these higher risk to reward ratios, because you don't have to be right as much to be profitable. If you have a 2-to-1 risk to reward ratio, you only have to be right 33% of the time just to be break even. So if you're right 50% of the time, if you have the 50% win percentage, you will be profitable. But that is why you aim for these 2-to-1s, these 3-to-1s, these 4-to-1s, these even 5-to-1s. So your win ratio can be, you could have a 20% win ratio, but if you have a 5-to-1 risk to reward, you're going to be profitable. You see what I'm saying? So a 20% win percentage, you only have to be right 2 out of 10 times. But if you have a 5-to-1 risk to reward ratio, you will be profitable. You see what I'm saying? If you are right 50% of the time and you have a 2-to-1 risk to reward ratio, you will be profitable. You see what I'm saying? So that's why you aim for these higher risk to reward ratios. You don't want to go for you don't want to go for the small moves. You don't want to go for a 1-to-1 risk to reward ratio, because you have to be right 50% of the time just to be break even. So that means you have to be right about 60% of the time just to be a little bit of profitable. And remember, Ross Cameron, one of the best traders in the world, has a 65, 66, 64% win ratio. And he's one of the best traders in the world. You see what I'm saying? And so you basically have to be one of the best traders in the world just to be slightly profitable if you have a 1-to-1 risk to reward. You see what I'm saying? So that's why you want to aim for these 2-to-1s and 3-to-1s, so you can have a lower risk so you can have a lower, you don't want to have a lower win percentage, but ultimately if you have a lower win percentage, your risk to reward makes up for those things, okay? And so that's what I was aiming for, right? I got in at this candle right here, this second candle. My risk to reward was up here. Why? Because I wanted it to break structure, right? Low, low, higher, higher high, higher low, higher high, right? So this is the last higher high. This would have been my higher low, and you want to break the higher high to make a higher high, right? So that's what I was aiming for, but I see too much struggle, not enough momentum, not enough volume, so I bailed out about up 20 some bucks, about 20 bucks. Excuse my good people, and ultimately that showed to be right. So that was the move that I got in at. And I missed this move, but I didn't really miss it, right? Like I said, that was tricky. But the move I am frustrated on is missing this move right here, which not really too frustrated on, but it was kind of like frustrating at the moment, because it's like I literally knew this was going to happen, but I wanted to pull deeper into my fair value gap. You see what I'm saying? So that's pretty much it. I hope you guys get what I'm saying. I hope I broke it down good for you guys. Remember, my goal is to be clear for you guys, to be able to teach you guys some things, to be able to document this whole journey for you guys to see me from unprofitable to become profitable. And remember, last week we actually had a green week. This week we're starting off. We had a winning trade. It wasn't much, but we have a winning trade. So we're starting this week off green. We're just stacking our wins, right? And so remember, I love every single one of y'all with me on this journey. Truly, none of y'all gonna notice. And please drop some comments on recommendations, if recommendations, and on like questions you have, and on like things you think I need to be more clear on, or things you think I need to explain better, and things you're not understanding with what I'm saying, and just like recommendations on what you feel will be better for me to teach y'all on what you guys want to see. Remember, I'm gonna do these daily recaps regardless, but like if you think like, hey Devin, can you go more in detail on these things, or can you break down what this is? You see what I'm saying? So just so I can help just keep teaching and pouring into you guys, because remember, my goal is to not just become profitable myself, but I want to be able to teach you guys the basics and the fundamentals of the market, and eventually even get you guys to be making money through these markets. So eventually we can all leave the 9 to 5, so we can all leave the 9 to 5, right? And we can all be able to spend time with our family and provide for our family, right? Because remember, all we need is Wi-Fi to open these markets. All we need is a Wi-Fi, so we can have our broker, so we can have our trading view open, and so we can have our charts open, and so we can and Wi-Fi for our earnings and stuff like that. All we need is Wi-Fi, right? We can be on the beach, but as long as we have Wi-Fi, we can be making money, right? So that is the goal, right? So remember, I love every single one of y'all. Remember, I don't want to make this video too long. This is about a 30-minute video already, but it's not that long, right? I mean, usually we up to about 40, 50, an hour, a minute, hour-long videos, okay? So I'm getting better with you guys. Please, again, drop any recommendations that you have on my videos, on what you want to see, or what you think I need to break down better, or what you're confused on, or what you think I need to do to better explain or entertain you guys and feed you knowledge, okay? So remember, I love every single one of y'all. Remember to study, and so because trading is risky, so make sure to study so you're not gambling. Remember to have strategy. Remember to follow your disciplines. Remember to have risk management, okay? because those things will keep you in the game long term. Remember, we're not looking to hit the jackpot. We are looking to be profitable and be able to do these things day in, day out, and truly create wealth. Okay. Remember, I love every single one of y'all who with me on this journey. And remember, guys, stay persistent, passionate, and make sure y'all get paid. All right. Peace.